All right, let's talk about the foundational rules of banking. If you're in the mortgage world, you know that understanding these regulations, well, it's not just about passing your exam, it's about building a career that's both successful and compliant. So today, we're going to break down the core principles that you absolutely have to know.
So here's what we've got on tap. We're going to start with the big picture, Title 12, and then really zoom in on the one law you'll live and breathe in your career, RESPA. We'll get into its mission, the rules you'll actually use day to day, who's enforcing them, and then wrap up with some key takeaways to make sure you nail that exam.
Okay, first things first, we got to get that 30,000-foot view, right? I mean, before you can understand the rules of the road, you really need to see the whole highway system and figure out why it was even built.
So, what is Title 12? Honestly, the easiest way to think about it is like a giant library. It's basically the entire collection of federal laws that govern banking and finance here in the U.S. This is the bedrock. It's what establishes the big players, like the Fed and the FDIC, and it gives all the consumer protection laws we're about to discuss their power.
Okay, so now that we're in this massive library, we're going to pull one very specific, very important book off the shelf. For you, as a mortgage pro, this is the one you've got to know inside and out. It's pretty much your guide to navigating the whole mortgage process the right way.
And that book is RESPA, the Real Estate Settlement Procedures Act. Officially, it's known as Chapter 27 of Title 12. And listen, if you're a mortgage loan originator, RESPA is more than just some regulation. It is the rule book for almost every single transaction you're going to touch.
But why? Why does RESPA even exist? It's a great question, because before you can really master the rules, you have to get the mission behind them. Trust me, once you understand the why, remembering the what becomes a whole lot easier, both for the exam and for your actual career. Check this out. This is pulled directly from the law itself. You can see that way back in 1974, Congress was super clear about its purpose: to protect consumers from getting ripped off by, and I quote, abusive practices during the home buying process. Every single rule in RESPA comes from this one powerful idea.
So to make this happen, Congress didn't just throw out a vague goal. No, they laid out a really clear four-part plan. RESPA is all about making sure costs are disclosed up front, getting rid of shady kickbacks, putting a cap on how much escrow money lenders can hold, and bringing record-keeping into the modern era. All right, let's get into the nitty-gritty, shall we? We're going to break down the key sections of RESPA, the ones you'll definitely see on the NMLS exam, and the ones that will come up in your actual day-to-day work.
First up, the big one, Section 8. This is probably the most famous part of RESPA, and you better believe it's the most enforced. This whole section is about one thing: shutting down illegal payments, unearned fees, and, of course, kickbacks. And this right here is the critical difference you have to get. It's actually pretty simple. Can you pay someone for a service they actually performed? Like, say, an appraisal? Absolutely. What you can't do is pay someone just for the act of sending a client your way. That's the bright line that RESPA draws in the sand.
And look, don't think for a second this is just about passing cash under the table. The law is super broad here. A thing of value can be anything: a gift card, tickets to a game, a fancy dinner, you name it. If it's given with the expectation of getting referrals back, and it has value, it's covered. Period.
Okay, moving on to Section 9. This one is simple but really powerful. A seller cannot, I repeat, cannot force a buyer to use a specific title insurance company to get the deal done. That choice belongs to the buyer. End of story.
And the penalty for breaking this rule? Oh, it's a big one, and it's easy to remember for the exam. The seller could get sued for what's called treble damages. That means 3 times the entire cost of the title insurance. That's a pretty steep price to pay for trying to steer the buyer, don't you think?
All right, next up, Section 10. This one is all about escrow accounts. Where money for taxes and insurance is held. This rule is designed to stop lenders from forcing borrowers to keep way too much money in that account. It's all about protecting the borrower's cash flow.
So what's the limit then? Well, lenders can collect what they need for the year, plus a little extra cushion. But, and this is the key part, that cushion cannot be more than 1/6 of the total yearly payments. That's 2 months' worth. Definitely remember that fraction. 1/6. It's a huge detail for the exam. Okay, so we've got all these rules, but who's the ref? Who's the one blowing the whistle and making sure everyone is actually playing by the book? That would be the Consumer Financial Protection Bureau, better known as the CFPB. So think of it like this. Congress passed the law RESPA as part of Title 12,
But the CFPB is the agency on the ground that writes the specific instructions, which they call Regulation X, and they're the ones who go after violators.
All right, let's bring it all home. How does this actually apply to you? Let's connect these rules directly to the stuff you're going to see on the NMLS exam, and, more importantly, what you need to remember for your career.
Okay, here we go. A classic exam-style question for you. A real estate agent gets a $100 gift card from a lender every time they send over a client who actually closes a loan. So which section of RESPA has been violated? Think about it for a second.
If you were thinking Section 8, you are 100% correct. That gift card is a classic thing of value. And it wasn't for any service the agent performed, right? It was purely for the referral. That is a textbook open and shut case of an illegal kickback under Section 8.
So let's lock these key takeaways in. First, RESPA's main goal is always consumer protection. Got it? Good. Second, Section 8 means no giving or receiving anything of value for referrals. Third, Section 9 gives buyers the right to pick their own title company. And fourth, the escrow cushion is capped at that 1/6 surplus. That's the core of it right there.
And that really brings us to our final thought for today. These principles baked into RESPA, transparency, fairness, they're the foundation for everything else in the mortgage process. So keep them front and center, because in our next explainer, we're going to see exactly how these rules show up on the critical documents you'll be handling every single day, like the loan estimate and closing disclosure. You won't want to miss it.